So one of the most important lessons that you can teach your children is how to be prepared for their own financial future. And Dylan Bond, he's the owner of Bond Financial Services. You're going to take us through it, because that's the thing. A lot of parents, they scrimp and they save so that they can leave something for their kids. But if your kids don't know what they're doing, inheritance is just going to be vanished.
Yeah, I mean, there's statistics out there that show the average inheritance nowadays is spent in less than 2 years. So you think about some of the people that work their entire lives, 30 or 40 years, to save money, retire comfortably, and then leave it behind, and then the kids are out there spending it in less than 2 years. That's a pretty scary statistic.
Well, I think a lot of kids don't realize that, you know, you need to save, and we always talk about that huge number that you need to retire comfortably with. So
right.
A lot of people don't realize that money should probably go there just for a rainy day.
Yeah, I focus my efforts working on people that are 50 and older. So a lot of the issues that we're talking about, I always encourage the kids get involved so that they know what's going on with the parents. But there are certain situations where the parents don't want the kids involved for one reason or another, and there are ways by using legal tools through lawyers or by restricted beneficiary designations. There are ways that if you have a bad kid or a good kid or one of each, you can
that might be the trickiest.
Right. You can actually control how they receive the money so that they don't get it all in a lump sum, and then they can and end up spending it inside of the first 2 years. So it depends on who you're dealing with, but ultimately I think it's important for the kids to understand if they are named as beneficiaries, who to contact in the event that something happened. I was telling you earlier that one of the things we do in all the new account books that we give our clients is we put a letter right in the book that says, in the case of my demise, contact Dylan Bond, because I want to make sure.
Not the kids first, you first.
Well, the kids should contact me.
Yeah.
Because I want to make sure that if they're going to claim as a beneficiary, they understand the tax liabilities and how to get the money most efficiently, so they don't end up taking a six-figure amount of money out of a tax-deferred IRA and end up with losing a third of it or 35% of it to income taxes at the end of the year.
That's true, and you can find the ways to kind of make the system work for you.
Right, exactly. Ultimately, it's a case-by-case basis. Like I say at my seminars, everybody's financial position is a little different. It's like a fingerprint. So there are general issues that everybody has, but everybody's issue is a little bit different, and that's why it's important to get to know who you're working with before you make any recommendations.
Sure. Well, Dylan, we have a couple tips for parents out there to start drilling into their kids now, because it's never too early, and the other thing is financial literacy isn't taught in school, so it's incumbent upon parents and financial advisors to teach the kids that. So advocate savings, because a lot of kids, as you were saying, they burn through it.
Absolutely. I mean, obviously life is going to throw a lot of curveballs, and what you find is if you start saving at 20 years old, by the time you're 25, there's something that comes up that you think justifies spending all that savings. But if you just understand and work with your kids as early as possible, and again, there's probably some 35 or 40 years old kids out there that could use this as well.
So everyone needs a little more financial education.
If you go to my website, bondfinancialservices.net, there's under the Learning Center, there is a calculator portion of the website. It allows you to add or calculate, if you were to put X amount of dollars a year away at a fixed interest rate, what would you expect to have down the road in a certain period of time, whether it be 15, 20, or 25 years, so you can illustrate to them how it does work, and the power of compound interest can be a very powerful tool if you start soon.
Actually, you know, you should just have kids go to your website, bondfinancialservices.net, because on there's so many tools and different calculators and slideshows.
Right.
That's where we get a lot of stuff that we talk about from your website, so everybody out there can too. The other thing, though, you can never start too early opening up a Roth IRA for kids too, and that's a great way to invest.
There's so many ways you can use a Roth IRA. If you have a young teenager or early 20s grandkid that's working but can't really afford to fund their Roth IRA, so long as they're making enough income in that year, you can gift them up to, at this point, $13,000, and they can take a maximum contribution to a Roth IRA, and you can help them put that into a Roth IRA as a gift each year. It'll help the retiree reduce their overall taxable estate for down the road when it comes time to face estate taxes, and it will also help the grandchild or the child build up a tax-free retirement savings for later in life.
So everybody wins, because one of those things, Massachusetts tax laws and federal laws, depending on how much money you have when you die, you're taxed at X rate. So it's
Right.
important that we kick down that savings and give it forth to our children.
The way I position it is this: you want to have enough money in your retirement to do the things you want to do when you want to do it, and then whatever's left over, you want to make sure it goes to who you want it to go to as efficiently as possible, without getting caught up in probate courts and legal fees and taxes. There's a lot of things that can go wrong if the estate isn't set up properly, and that's why it's important to have a good estate planning attorney, have a good financial advisor, and also a good tax accountant.
So that's where Dylan comes in. It's a pleasure to have you here, as
good to be
always. And
here.
you can visit Dylan at bondfinancialservices.net or call 413-754-4747. Just let Dylan and his staff take the steps to secure your financial future.